Are you looking to buy a home in the next 12 months? I've made videos about what you should do and 8 steps to home ownership. In today's video, I'm going to tell you what you don't want to do. Stay tuned. All right, Matt, the mortgage guy, powered by You Mortgage, licensed in 48 states. Connect with me and my team. Go to greatmortgagebroker.com. In today's video, I'm going to jump right into it. I want to talk about a few specific things that you absolutely, positively don't want to do if you're looking to buy a home in the next 6 to 12 months. It's cool to talk about the things that you should do, but I'm going to talk about in this video some examples of some things I've seen that will really torpedo, ruin, sidetrack, hurt your chances of buying a home. So let's get started with number one. If you're looking to buy a home in the next 6 to 12 months, you don't want to change your financial situation. And that can be job, that can also be debt. What I see from a lot of folks is they're thinking about buying a house and they're well qualified. They go from a W-2 job to being self-employed, or they go from a salary position to something that's variable, not knowing, hey, it was an upgrade because with the different commissions I'm going to receive and with this other compensation, I'm going to end up making more. Or maybe they add, 2 jobs that are both variable in place of the one job that's salaried. If it gets looked at differently from the lenders and you need a history of something that's variable, because that's what the lender is going to need. Salary, $8,800 a month is $8,800 a month, and you're guaranteed that every month. Commissions or hourly pay or variable pay that might be $5,500 one month, $11,000 the next, $9,000 the month after that. That's variable, and lenders, generally speaking, in most situations, are going to need a 2-year history of that. So you might get what you perceive as, a pay increase or a step up, always recommended, right, to advance in your career. But if you're in the middle of trying to buy a house, you might want to rethink that, or at the very least talk to a loan officer before you do it, right? So on the job side, you don't want to make big drastic changes if you're looking to buy a house. On the debt side, don't take out new debts. Don't take on new financial responsibility. That's going to change what you're pre-approved for. It's going to change your buying power. It's going to change what fits into your budget, all of those things, right? So if you've got a point in time where you're pre-approved and I can buy something for $600,000 with 5% down, I'm qualified. While rates might fluctuate, home prices might fluctuate, you don't want changes to also be happening on the stuff that you can control, which is the job and income side and the debt side. Number 2, don't neglect your credit. This is another thing that people don't understand. When you're buying something for $500,000, $750,000 and financing a vast portion of that, the terms you get on the mortgage can affect you by hundreds of dollars a month, thousands of dollars per year, tens of thousands of dollars over the life of the loan. You don't want to miss a Kohl's payment and end up spending $40,000 more on your mortgage because of it, right? So make sure that you don't neglect your credit. You don't want to make late payments. You don't want to default on any loans. You also don't necessarily want to open up new credit, max out the current credit you have. So be cognizant of that if you're in the process of buying a home, because it does play a huge role, right? Credit is a big piece of it. And, the extreme would be you no longer qualify, right? Like your credit score tanks and you've got a collection and a payoff, something between when you looked at it and now you don't even qualify. But even, more common is you still qualify, but you might be paying 0.25% higher in interest rate because your credit has gone down for one reason or another. So whatever you do, don't neglect your credit. Make sure you increase your chances of securing the most favorable interest rate that's available at the time. Last and not least, I'm going to bunch a bunch of stuff together and just call it preparation. Don't skip the preparation process. And inside of this preparation process can be connecting with a lender, connecting with a realtor, doing all your own due diligence, where you want to live, how much you want to buy, what monthly payment is comfortable for you. That's something that I see people do all the time. They might do the other things correct. They got themselves pre-approved. They made sure their credit, was on point. No job changes. But when it came to preparation, they just kind of said, pretty house, we qualify, let's go. Not the way to do it, right? And I'm saying that as a mortgage professional that has conversations with clients day in and day out. A great professional wants you as a pre-approved buyer to reach out and ask questions. They want you to get clarity around what your options are. We want you to put us to work in a sense, right? Because it benefits you. At the end of the day, it makes the process less stressful for you, and it makes the experience better for you so that when you get to the finish line, you're happy, we're happy, the friends and family you refer are going to be happy. Everybody's happy, right? So don't skip the preparation piece. And I think that's where I would leave it for the three things you absolutely positively don't want to do if you're looking to buy a house. You don't want to change, make any major financial changes, job, debts on either side, right? Number two, do not neglect your credit. Have anything that's going to dramatically impact your credit score, because at the worst, it's going to hurt you from qualifying at all. And at the best, it's going to cost you thousands in interest because your credit score has gone down. And then three, do not skip the preparation piece. And that preparation piece includes connecting with a great lender, connecting with a great real estate agent, and also doing the work on your end to make sure that you're prepared, not just, financially, but at knowing exactly what you're looking for. So when it comes along, you can move on it. Hopefully this was helpful. Any questions at all, you know where to reach us. If you want to get pre-approved, greatmortgagebroker.com. No matter where you're at, if you want to connect with a great real estate agent in your market, homeandmoney.com/Matt. If you're in California, we're happy to connect you with a real estate agent. So just contact us through greatmortgagebroker.com. No matter where you're at, we're in 48 states. We look forward to talking to you.